Hey guys, good to see you again. We're back. We're live. Doing it all over again, just like we did on Tuesday in the Euro session. And we're back for the US session. Hope you guys can all hear me well and everything's going great. So, there's a lot to talk about today. You'll notice I left the risk disclaimer up for a short period there because that's something everybody needs to know. So, how's it, Daniel? I see you the first on here and you've made a good couple $100 today. That's fantastic. How's it, Carl? Welcome. Good to see you as well. Yeah, so I'm glad someone's making money. That's perfect. That's absolutely excellent. I must actually talk to you about how the US 500 trade played out. Didn't go well yesterday, and I see it's starting to go, and it's a short run again. Now, the only reason I put the 5-minute chart up here, guys, is because it will normally tell you if you get a run like this when on the open, it's probably going to go long today, most likely. Let's just have a quick look here at the normal charts and just see where we are and how we stand at the moment. I don't know what's going on with my charts here today on this one, but I tell you what, we can go and have a look on our normal charts and just see there. Okay, this is the funded trader challenge chart that comes from what? Funded Trader Markets. If you want these guys, there's a link in the description as well. Where are we? Oh, over here. Okay, so yesterday we did take this trade short, and we took the trade short. Okay, let's go over here. Let's go to the US 500 because, yeah, I don't know why I'm trying to work on that chart. Okay, so we took this trade short around the 54.68 area yesterday because it looked like it was on the trend and it looked really good. Looked like an excellent trade. And it did actually go short. Unfortunately for me, I actually opened the trade at exactly the point that this trade had hit the 54 mark. And I moved my stop loss down to about 7 points above cost. And I was 60 points away from this. So, I mean, it's the S&P after all. 60 points is a fair stop loss. And when I looked again, it had gone back and taken my stop loss out. And obviously, but at least I was in a profit when it took my stop loss out. So I'm not too concerned about that. On this account, wouldn't have made much difference. But on the other account, it makes a couple of $100 difference. So that was brilliant. So actually, that was a win, but I was expecting it to make us a much bigger win at the end of the day. Oh yes, the Nasdaq as well. Yeah, no, I mean it's the trouble with volatility. You've got to be careful of the volatility in the markets because the market will always give you a false sense of security, and you'll think you're in the right trade and things are going well, and when you look again, it'll turn around and nail you. So don't let it give you a false sense of security. That's always difficult. Um, yeah, how's it, Julian? Thank you for bringing reality. Yeah, the reality. Yeah, it is a reality. Let me tell you, it is a big reality. It's all about your mindset and how you approach things and how you approach trading. So many traders out there, I must say, believe solely in the charts and that only the charts can make them the money, that the system will make you the money. And that's what I'm trying to get across with my 50-50 principle is it's not about the charts as much as it's about your mindset and how you manage your system at the end of the day. Because if you manage a system correctly, then you will be profitable. You will make it work. You will make it happen one way or the other. It's all about just understanding that you've got to take smaller losses and make bigger wins, as I always say. And it's all about if you just keep your stop loss at the same level until you're ready to increase it on a certain account, and you understand that you're paying for that trade and that's the amount you're paying for that trade, and any profit you make off that trade is bonus, then you start understanding what the 50-50 principle is. You can effectively take a trade at any point on the chart without any of these indicators on here, and the chart's only gonna do one of two things. It's gonna go up or it's gonna go down. It's not gonna do much else, or it's gonna trickle along in a range. But either way, If you take a trade anywhere on this chart, even if you're a complete novice, there's a chance that you could win the trade. And that's what I'm trying to get across to people, that if you manage your risk and you manage your business properly and you look for profit, you will make a profit. For example, if I look at this US 500 trade of yesterday and I say to myself, as a business, I went short on it yesterday, it went short, and I was $200, I would have been $250 in the red had it taken out the normal stop loss. But when I saw it going to profit, I moved the stop loss, obviously, to cost, or 7 points above cost, let's say, and effectively made myself a $250 profit right away, because the trade that I had paid for was now a free trade. Now this trade is for free. I'm not worried about all that profit. Take your time taking your profits. Take your profits slowly. Take your losses quickly. When you see a big loss coming in and you see the trade going invalidating, get out, take the loss. Take the losses quickly, but take your wins slowly, because you see a win on the board and you think you've won money, but you haven't won anything yet. It's still in the trade. And the first reaction everybody gets is to get out as quickly as possible. Take the profit and run. And there's nothing wrong with taking profit. Don't get me wrong when I say that you should be slow on taking your profits. But because in some cases, the gut feel is, I need to take this profit and I need to go. And until you're comfortable with leaving something on the board, don't. You know what I mean? But what I always say is, if you can get around that, and if you are able to leave money on the board, when you go into profit and you have a long run like this one over here on the S&P, the US 500, if you had been long here and you had gotten out of your trade here, imagine how you would have felt when you saw it go all the way up to the top. So if you had just moved your stop loss up behind it the whole way up, you would have made all of that profit. And that's the trade you're looking for. That's that one trade you're looking for that will negate all the little losses that you make. What most traders end up doing is they end up taking lots of little wins and one big loss. What you want to do is take lots of little losses and a big win, because the big win is where the profit is in the money. The 50-50 rule is true. It sure is, Daniel. The 50-50 rule sure does apply. There are many erks out there that won't agree with me. And there are many people out there that still believe that a system can make them money. What you have to understand about a chart, this is a chart. And behind that chart is real people, real human beings are behind this chart, trading this chart. There are a few bots, I agree, but at the end of the day, there's real human beings putting real money behind these trades. And 9 times out of 10, or most of the money, is coming from professional institutions, big money, money that we aren't even close to being able to move around. Unless, of course, you get the GameStop scenario where really everyone got together on one trade. So we can't move the markets. It's the institutions that actually move the markets, and they put their orders in place. Now we come along and we think, as little retail traders, that we're now going to take these guys on and we're now going to show them how to trade the markets. Just saying, guys, just saying. It's a 50-50 game. Look for where they've got their orders and play into that. That's what the support and resistance does, the supply and demand does, the trends do. You're basically looking for where the orders are, and you're looking to play off of those orders. And by the way, you know, at the end of the day, you know, a lot of people say, I must show you a system that will make you 7 wins out of 10 or 8 wins out of 10. I am actually showing you a system that can make you 8 wins out of 10 if you want. But it's about how you apply the system, and that's where the problem comes in. 2 people can trade exactly the same system. Two people with the same experience, with the same age, with the same everything, can trade the same system in 2 different rooms, and I guarantee you that both those people will get a completely different result. And that completely different result is traded on exactly the same system with the same rules and the same application. And you'll say, but how's that possible? Well, it's pretty straightforward, guys. It's because there's 2 different human beings trading that system. And this is where you start to understand that it's not the system that makes you money, it's your psychology and how you approach things. So the two different people, one will actually make a loss and the other one will actually make a profit on exactly the same system, simply because of the way they applied themselves, the fear in their minds and how they approached their fear when playing the market. And, just do a little experiment you can do for yourself is if you take a demo trade, take a demo, and then have your real money on another account. And trade with the demo and trade with the real account. And you'll see how much easier it is to trade with fake money than it is to trade with real money. And then you understand the fear. You understand the psychology behind it. It's your money that you're trading with. That's what makes all the difference. That's what changes everything. That's why I always tell you guys, trade within your means. So for example, if you are trading on a risk of $200, make sure that that risk is within your means. Make sure that you are comfortable that if you lose that money, that's okay. I can move on to the next trade and I'm not going to have a sleepless night and I'm not going to worry about how I'm going to feed the family. If you're trading at a risk of, if you're comfortable of trading with a risk of $200 and you suddenly shoot it up to $1,000 and that fear kicks in, you'll start making rash decisions. You'll start making mistakes, especially when it goes into a loss, and you'll start doing all the wrong things, even though you know you're not supposed to be doing them. Doesn't matter how long you've been in the market or who you are or how strong you are. When you overtrade or when you trade too much or beyond your means, that thing in your head will destroy you. It'll make mistakes like you cannot believe. It's a funny thing, but that's how it goes. Yeah, so here we are, and that's the US 500. Are we going up or are we going down today? Come on, you guys tell me, are we going up or are we going down today? Because I see, who said I'm long on the, yeah, you made profit on the US. I actually did as well. I was actually quite surprised that I did. I thought I was going to take a loss in the end, but we did quite good out of that, eh? Yes, someone was long on the US 500 here. I'm just going back up here and having a look. But, Alice, I made a profit on the US 500. Alice, you long on the US 500. Okay, no, that's great. I can see the US 500 going up to resistance. And like I said to you on that 5-minute chart, we were on the 5-minute chart just now. And which one is it? Is it this one? And I had a 5-minute chart going. There's something wrong with these charts today. And it was actually showing me that it was going short first. So normally it goes long straight after that on that time of the day. So yeah, I expect that it might give us a little bit of a long trade today up to the resistance up there. Let's draw it on this chart just out of interest. Horizontal line. Let's draw the resistance in. And let's see. There we go. And yeah, you've got all that space where you've got all that space to go. So you might actually get up there. I think most of the indexes will do this. But this morning I was looking at short on the FTSE, which I've got on my other account. So I should have taken it on here as well. But I don't switch this damn thing on. I should actually do that. Okay, here we go. It was trending down and it looked like a decent trade. So the FTSE was in this morning. There we go. And it is going short. So that's profitable. That one's going well. Stop loss just above here. So that's all okay. But I don't want to now get into the short now at this level here on our funded account, because it's actually gone quite far already. I mean, we got in at about 82.80 or something like that. So, okay, that's fine. We'll look for another trade on this. I must actually learn to like follow this and try and make it work. I've got no positions open. I just don't open this thing. Okay, I want to show you guys. I'm actually going to start showing you guys my MT5, but I just worry about the account number, like I said last time, especially on the live. So what I might do is just opening another account, and if anybody gets that account number, so be it. It won't be a big deal. I just got to make sure with the guys that everything will be okay. And then we can use show you on the MT5, because that one, that's my system, and that's the system I know best, and that's the system I like to work with. These trading view charts are great for showing you guys how to trade. I actually love these charts, but I don't use them here in South Africa, so in Cape Town. Anybody looking at the euro US dollar today? Let's just see. Euro US dollar looked like it was starting to go long, and there it is. It's definitely doing that. Yep, there we go. Let's just have a look at the euro US dollar, see if it's actually going long today. And yep, there she goes. She's starting to go long. Look, it is against the small trend, the 4-hour trend, but I can see a sort of bounce coming off of here. I don't think it's going to go very far. It'll probably go up to the sort of trend resistance here somewhere, and it's not really going to go all the way to the main resistance most likely. So you're looking at a trade up to about 111. So, and the Great British Pound US dollar probably pretty much the same. What else have we got? Gold, of course. Gold is running beautifully, guys. Look at that. Who's still long on gold? Somebody must be still long on gold here. Told you guys, when it goes through those 25, 27, it's gonna run. Look at it running, eh? Look at it running. She's running beautifully, guys. She's running beautifully. So she's broken out. She's definitely broken out. She's broken out above the resistance. Okay, you got to wait for this candle to confirm, because it's still the same candle, and hopefully it doesn't run back in here. But if it stays out there and you get another green candle, we're good to go. This guy looks lovely. She's broken out. So hope you didn't go short on gold. I did tell you guys to stay long on the gold, so that's looking pretty decent. So gold is good. Right, where are we now? Let's have a look. What else have we got, guys? What were we looking at? The Germany, the DAX. Well done, Coral. Hey, yes, you were the guy on gold with me. That's true. And I'm glad you held it. I'm glad you kept it. That's absolutely fantastic. I must just learn to take the trades on this flipping challenge thing here. I keep forgetting to take the trades here. I think I must really start opening this one up as well in the mornings and just trying to clone the trades maybe, or something to that effect. But it takes time out of my life, and that's always the issue. Okay, so the DAX is a little bit short here. I was expecting that it would get up to the resistance before it starts turning around. Let's just see what happens. Let's give it a bit of time and see if it stays long or if it starts going short, because the DAX, I was looking at a short trade on it, but I thought, no, I'll wait, because I just wanted to get up to that resistance a bit before I take it. And it's already started going short, so yeah, that's interesting. The DAX is already starting to turn. The FTSE's already turned, so Europe is Europe's the weak one. And also, I believe the Nikkei, where's my Japan job? Let's go here. Yeah, that's it. Japan is looking pretty weak, eh? So let's take it to the H4. It looks a lot like the US dollar, Japanese yen, or Japanese yen, US dollar, same sort of chart. But yeah, this is a short. The Nikkei looks pretty short. Call it the Jap 225 here. So you could definitely look at taking a short trade on this particular product. I don't normally trade these markets, these Asian markets, because I'm normally asleep when they start waking up. But if I look at this, let's just look at the day chart. See what we've got here on the day chart. If I look at this day chart, yeah, look at that. Pretty much sitting on a resistance, actually. Let's see what we got. They're right on the price. Look at that. Interesting. Let's see what we get out of this. Maybe it'll be a short for the challenge account. See where we go. Where's the resist? Where's the support on this, Aki? Somewhere down here. There's a bigger one down here, but there's already one here, so it's quite close by. Let's see if we can get anything out of that. Put it back on the candles. Let's put it back to the H4 and see what we've got. Yeah, you might actually get a bit of a short trade out of here. I don't know if we should take one on the account just for the hell of it. 37070 as a stop loss. 37254 as a stop loss. I don't know, might be a worthwhile one. Try it out, see how it goes. Japan has been pretty weak. Let's have some fun and put an order in here. Okay, so stop loss, what did I say? 37. Yeah, let's make it 37245. Let's put that in there and work out how much we can play with here. And we shall. Oh, it's actually okay. I'm not sure how many contracts we can take on this thing. Let's just see. 4. Yeah, 4 will give us a good trade. And then take profit we can put at 36135. That's not very good risk to reward that. Why? Oh, I see. That's my mistake. It's 35135. I was wondering why the risk to reward was so poor on this trade. That looks better, eh? 400 Rand, $400 profit for a $200 loss. That looks pretty fair. So we'll take a sell on the Nikkei. How's that? And then at least we've got a trade going on this platform. There you go. Perfect. There's a trade running on this platform now. That's what we need before they shut me down for messing around. Okay, so how's it, Harvey? Welcome. How do you get an entry into the 4-hour? Look, I'm more of a swing trader than a day trader. Let's be perfectly honest with you. And I don't like to sit and look at charts all day and sit and watch charts all day. I'm not that kind of trader. I'm not a day trader. I look at the chart and I trade what I see. But whether you're looking at it on a 5-minute or whether you're looking at it on a 4-hour, it's the same principle. It's just that you're working on a 5-minute chart. But what I find is I've had so many friends in the market over the 30 years I've been trading that have tried trading on the 5-minute charts and 1-minute charts and whatnot, and have not been very successful with it. Let's say they've been pretty much lost. So all I do is I don't trade. I trade probably different contract sizes to you, or different amounts of points and stop loss and what have you to the 5-minute, because you're trading on a much shorter time frame. And obviously on the day trading, you get in the same day and get out in the same day. In fact, in the same hour. And when I'm bored, I'll trade on the 5-minute and play around with it a bit and whatnot. But I don't really bother with it. I actually do prefer to just swing trade it and walk around and leave it. But finding the trades are quite easy because, as you can see, this Nikkei, you can look at the Nikkei in general. I mean, if you go to the day, you can see it's short. If you put it on the 4-hour, you can see it's short. I could go down to the lower time frames and look for a sniper entry on it, let's say, but no, it's quite easy to find the trades. This is in a bearish trend at the moment, and there's a resistance and there's a support, and it's basically breaking downwards. So it's pretty straightforward. There's no technicality to it. If the market goes up or it goes down, it's a 50-50 game. I don't get overcomplicated. I don't get tricky with my trading. I don't wait for the moon to come up or anything to that effect. I just trade. So how's it, MF? How's it then? Welcome. But you don't have to work on the 4-hour. All I say is, in my experience, in all the years that I've traded, I only know 1 or 2 guys that are successful on those low time frames. And, the guys that are successful are really big time. They really know their stuff. to be successful on those lower time frames, there's a certain kind of mindset that you've got to have and a certain kind of understanding that you've got to have for money. And especially if you're starting out, I don't recommend getting onto those low time frames immediately. Learn to trade on the slower time frames and work your way down that way if you want to go there. Most people who are trading on the lower time frames, it's maybe because it's exciting to look at a chart maybe, or maybe you don't have anything else to do, or whatever the case, but that's what it's all about at the end of the day. Well, major news, like I said in my last live show, in the earlier years of my career, I wouldn't even say the earlier years, probably middle way through, I used to hang my hat on the news. I waited for the news. The news was the most important thing for me. I actually traded more on the news than I did on the charts. And then I found out that it's just a bunch of people moving the markets around, up and down. And at the end of the day, markets are moved by the money flow in the country. In other words, the country's debt, the country's economy, the country's inflation as a whole, not by hanging on the words of what somebody says. And if those news items were maybe only once a week or once a month, that would be fine. But it's all week long and it's every day, and you hang your hat on it, and it just stresses you out and drives you completely crazy. I actually find on the higher time frames, it's easier for me to pick a trade on the 4-hour than the 5-minute with the news. So for example, if you have CPI or jobs figures or non-farm payrolls, and you're on a 5-minute chart, you're going to get stopped out pretty quickly on Forex particularly, and even on the indexes. Because what actually happens is you tend to get into the trade, the news comes out, it shoots one way and then it goes the other way and it takes your trade out. Whereas with the day or the 4-hour or the hour, you can put your stop loss that much further away. So for example, look where my stop loss is now on this Nikkei trade that we took a few minutes ago. It's above the last highs, okay? We're short, right? So it's above the last highs over here. And if we had a news item tonight while I was sleeping, worst case scenario is it's huge. But that's a big move for the Nikkei. Look at the size of the candles. It would be a massive move for it to take that stop loss out as it stands at the moment. It would be a bar like this one, for example, which is actually really, really big. So what I'm looking at as in the higher time frames, the news doesn't affect it as much as it does on the slower time frames, like the 5-minute, 1-minute, that type of thing. So if you have a news event on a 5-minute time frame, you're probably going to get stopped out. Whereas on a 4-hour time frame, you probably won't. Although I did yesterday on the US 500, but that was because I moved my stop loss up into profit, and then it went back and took it out. Yes, the FTSE. Yeah, I am actually short on the FTSE on my other account. Like I said, I forgot to open this account up this morning, so I should have taken the trade here as well. But yeah, it's a great trade at the moment. Great trade. My only concern was on the FTSE. Let's just go back here at these charts. FTSE was when I was taking the trade here. You see, what I looked at when I took the trade as well was this nice where the sellers came back into the market. The nice tell, you've got a hammer that's developed here, and that gives you a nice clear signal to sell. You sell, and I think it was around 82.80. Yeah, 82.80, and then you sell, and she's going down. My concern was it was going to break through this resistance and then go up to the main resistance, but it didn't. She gave a nice sell signal, and she's selling down to the downside. So I expect it'll probably come down to this 81.50 level. That's my target anyway. When it gets down to around the middle here, I'll move my stop loss down to cost, or cost plus 5 again, or something to that effect. And that's a nice trade. That's actually a very nice trade that you've got there. So yeah, that's it's a pleasure for giving you the idea. By the way, I give you guys the ideas every day, but sometimes my ideas are going to be wrong. So just do your own research, guys. Just remember, I'm a human being. And I'm also a 50-50 trader. So half my trades do go wrong. Like yesterday's US 500 trade, it didn't go wrong, but it did, because it went short. And while I got out of it, I was quite concerned that a few people may have got into it and didn't get out of it. So yeah. What would be the best advice regarding trading you would give your younger self? That's a really cool question. And you know what? It's not a difficult question, but it is complicated in the sense that when I started, we didn't have computers. We didn't have all this fancy stuff. Well, hang on, I did have a computer, but it was like one of those first computers ever made. When we used to connect to the internet, we used to connect the telephone to it, and you didn't have any live stuff or whatever the case. So I used to dream of having something like this. But the advice I would give to my younger self is the exact advice I'm giving you guys now, is don't hang your hat on charts and the news. Although the news is important, it is important, guys. Fundamental trading is important because you need to know if there's a war or anything going on in the world, or something, there's a bank going bankrupt or whatever the case. Those are important events that are going to affect your trades, your investments, or anything to that effect. But what I would advise myself is to go to a psychologist, I suppose. No, really to learn how to work around it with your mind, to understand that it's a business, number one. Firstly, that it's a business. It's not just about trading. And you have to learn to make a profit, and you have to manage your risk. The big mistakes that I made the same mistakes as all the beginners make today. Believe me, I made the same mistakes. No stop loss was one of my biggest mistakes. Man, I got into the markets, and you could stand there until you were blue in your face and shout at me and tell me, Rob, you must take a stop loss, and I would argue you down. I would argue you flat. I'll tell you, no ways I'm taking a stop loss. There's no ways that I'm going to take a stop loss. It took me probably, I don't know whether to say a year or a big loss to realize that managing your risk was important. So that's the one big piece of advice that I would give to myself, is I would teach myself to learn how to manage my risk and learn that taking a loss is the most important thing to learn. To understand that being a good loser will make you a good winner. It's just one of those things in life. I get your point now. I think my adjustment would be taking a lot size compared to my, yeah, that's it. That's the big thing, is when you take your trade, just for example, the way I took this Nikkei trade now, if you look at this account, now this is a funded trader challenge that I've taken on for whatever reasons, so that I can trade with you guys effectively, so that we can do this together. Because there's actually no point in me taking my actual account, and I don't want people to see my account number in the first place, but we're trading on a different ball game there. And I actually, on my real account, will just have 10 trades open, knowing that 5 of them are going to win and 5 of them might lose, and there's enough money to cover it. So that's the way I look at trading. This is more complicated for me, and I did this because a few guys said to me, but we don't know how to handle the stop loss and this, that, and the other, because we've got limitations with the funded trading and rules and regulations and all the rest of it. So I took this on. And this was a $25,000 account, which you can see we're losing at the moment. And interestingly enough, what I figured out is I can't just put 10 trades on here and leave them, because you've got a limitation that you can lose per day. So now what I got to show you guys is how I look for a trade. So for example, each trade on this account is a $200 loss maximum. So I'll pay $200 for every single trade. That's it. And if it loses that $200, so be it. But then I can only take 1 or 2 trades on this account, because I'm only allowed to lose, I believe, $1,000 in a day. So that makes it complicated on its own. So what I do is I just, for example, take the trade, look at the risk, $200 risk, put the trade in, and then I'll do my usual, move the stop loss down, add to the trade as we go, and try and take away the risk factor of losing the $200. And it, if you work on that sort of basis, it does kind of work out for you at the end of the day. Was there times you thought you would stop trading? Jeez, Carl, so many times, dude. So many times. But you know what? This is like riding a motorbike. How many of you guys have actually ridden a motorbike? Because you'll know that you'll stop riding and it won't be long before you've bought another motorbike. Okay, so it's like a drug. It's crazy. I have tried to stop a few times, particularly when I had a few businesses on the side that really required a lot of my attention. And I thought, well, I can't trade now, and then I'd concentrate on that. And believe me, I'd get back into trading every single time. This is like a drug. It keeps dragging you back. Once you get into it, sorry to tell you guys this, but once you get into it, you ain't never going to leave it behind. You're always going to go back to it. No matter what happens, whether you lose, whether you win, you're going to end up going back to it. It just is what it is. And so, yeah, I have many a time thought, I'm going to throw this in the bin and walk away. And I always end up doing it again. But the thing is, after a number of years of doing it, you start learning how to make the money and you start becoming successful with it. And then you get into the investing side of it. And then you learn that it's actually an okay game. One of the big things is especially for the younger guys, is to learn how to invest. Especially if you've got a normal job on the side, or even if you're just making money out of trading, don't place everything into trading and say, I'm just going to make my money from trading. If you can, take some money aside every single month, invest it in some equity, and try and choose, if you don't have a lot of money, 3 stocks. If you have a lot of money, 10 stocks. And then just add every single month for the next 10 years. And you'll be so glad you did that. And just remember, choose good dividend paying stocks. They will end up paying you at the end of the day. So you'll be getting the dividends every year, and you'll have that investment, and it'll be invested. It'll be there forever. So it's almost like a pension. It's absolutely amazing. So yeah, thanks, Daniel. Yeah, I'm trying to protect my privacy. That's my big concern. If I put my other account up here, that account number, there's so many things going on in the world, and so many oaks out there, that will get into your bank account and all kinds of strange things. I'm just not too comfortable yet with that. So we'll get around that, because this is very public, let's be honest. So yeah, the things I'm showing you here, nothing can happen with this. Even if you take my funded trader challenge, do me a favor, go and pass it. So yeah, it took you 6 years to take the plunge. Yeah. You know what, Daniel, do yourself a favor, and that what I just said now about the investing, it's a great thing. If you can, buy normal equity, not gear trading, normal equity, just normal everyday. Go and buy a Coca-Cola, a McDonald's, whatever the case, and just add to it every month. Just add to that trade every single month, and I promise you, in 10, 15 years, you'll have so much money. As long as you keep putting into it and you don't keep drawing on it, you'll be extremely happy. You'll be drawing a salary from the dividends at the end of the day, and that's the big thing. That's the main thing. Hi, Ivan. Welcome, dude. Welcome. It's good to have you on board. And I see we've got a few people. Yeah. The Euro session was a bit iffy. Not many on the show. But yeah, we are a new channel, and we are growing as we go. And the reason I did this, as I said last time, is really because I was watching all the videos and watching all these guys tell you guys that you're going to turn $100 into $1 million, and it just made me mad. It made me crazy. I thought, gee whiz, how's that? I've never seen anyone really do that. And anyone who can do that is most probably an insider trader, if not a real pro. So yeah, no, it drove me absolutely nuts. So I got this up and running, and I thought I'd put 1 or 2 videos out, tell everybody that that's absolute rubbish. And I ended up putting so many videos out, and I never thought I'd see the day. I never dreamed of the day that I'd be sitting here talking to you guys live, or having a channel that's growing at this immense rate. So thank you guys for being around. It's fun. I'm enjoying myself, and I'm actually learning something new while I'm about it. And it keeps me busy, which is a good thing. Keeps me out of trouble. Because believe me, with my kind of trading, I can go out there and get into a lot of trouble, because I leave things lying around on the side, and I don't sit here in the office and watch the charts all day. So that doesn't help. So yeah, no, I never expected this to get to where it is, but we'll keep on doing it, and we'll keep it going. And I'm really happy that it has grown to this, and I'm actually enjoying learning something new for a change. It's worthwhile. Tom is a fantastic trader. You know, if you read that book, you are going to get a lot of information. But do keep in mind, I mean, he's probably one of the oaks that that I would look up to. Besides, who was the South African guy that he used to know that passed away recently? Also a fantastic trader as well. And he used to trade on the longer time frames like I do. But Tom, understand one thing about Tom. He's an amazing trader, but he trades short term, 5-minute charts, and he trades big money. Okay. And I sometimes look at that as it's very dangerous for a beginner. He's really good. He's really good. He's one of the best, I must say. Lots of love for him. He's brilliant. In fact, probably one of the best traders around, and has made a fortune as well, by the way. So here I am talking somebody else up, and that's just me. There seems to be something wrong with that platform, so I'm just going to leave that to carry on running. And that jumped, and that trade is actually losing. Oh my goodness, look at that. Yeah, terrible, man, terrible. We'll see what happens. That's fine. So yeah, no, read that book. I've actually got a link to his book in my description as well, by the way. It's there. And he's actually been around for quite a long time as well. Fantastic trader, I must say. Absolutely brilliant. One of the few. And there's not many out there. Let me tell you, there's not many out there that can pull this off. Well, I've got the mindset to pull this off, because that's what it's all about. It's all about the mindset at the end of the day. If you don't have the mindset, it's a difficult game. It's a really difficult game to pull off. You're not going to pull it off easily. So I hope my internet's not going off and on or anything like that, because I see that actually jumped, and it must have gone off for a second or something. So if there's any problems, let me know. Hopefully it's all staying on, and everything, the latency is fine, and everything's okay, and the sound is fine, and all the rest of it. Yeah, so the best way to stay in the game is if you just keep your psychology right and you manage your stop loss. Yes, no, Harvey, that's the thing. He totally tells you about the psychology and the mindset, and that's, you can learn a lot from him based on that. But don't try to trade like him, because it looks easy, but believe me, even he'll tell you it's not easy. Ivan, gold running nicely. Let's have a look quickly. It must be running nicely. Come on. Yeah, there we go, man. There we go. There's Carl's going to be super happy about that. And so am I, by the way. She's running like a dream. I told you guys, when it breaks out of this resistance, it's going to run. And she's running. There she goes. So that's fantastic. Glad you guys are in the gold. Rob, on your ideas website, there are links for botway. Is that something you also... I don't endorse it. Let's put it this way. It's just, how can I put it? it's companies that advertise on the website and stuff like that with me. And if you see anything bad, if you see anything that doesn't look like decent, just tell me and I'll have them removed, and that's that. That's It's not something I actually endorse or anything to that effect. It's just basic advertising, I suppose. And I don't really, if I endorse something, I'll tell you what it is and what it's about. And for example, I don't say I endorse these guys, but I'm using these guys for our challenge, and they seem to be legit guys. But like, for example, if you go and take on funded trader markets, it's on you. I'm not part of their company. I don't work for them or anything to that effect. But yeah, they're here and you can grab them, and I'll give you a link to it and stuff like that. But further than that, it's the same as these charts. If you want it, that's great. So yeah, no, I'm not a big fan of bots. I'm not a big fan of bot products actually, because how bots work effectively is you take a trading system. And you work it back and you put all the calculations in to make a bot. And the bot follows your trading system or a trading system to the T, and it ticks all the boxes, and then it takes a trade. And some people claim that they can make a lot of money from it, and others say they don't work. I've actually never seen a bot really make a lot of money or do anything great. I prefer to trade live and know exactly where everything's going. Gosh, gold is really running there. It's doing quite well. Yeah, you're still struggling to know when to enter. Okay, so Harvey, you're doing well out of the gold there, man. Good stuff, good stuff. Tough with that. That's fantastic news. I've been long on gold since somewhere down at the 24.95 level. Where was it, Coral, that we got in long? Was it 24.95 or something like that on the other account? And it's still running out. It's doing quite well, I must say. I can't complain about that. It's one of my 10 trades that I've got running on the account. So yeah, that's. I'm glad it's going the right way at least. That's the trade you're looking for. That's the one I'm talking about. You see what I said to you when I said take small losses and big wins? That's the one that you're looking for. That exact trade. That's the one you're looking for. It's running all the way. So, yeah, no, Carl and Harvey, both of you doing fantastically there. Absolutely brilliant. And that's good money coming your way. It's probably going to run nicely now. So, off you go. That's the one. Let's just have a look here. Okay. No, yeah, that's the one, the question. Still have difficulty to know when to enter. Okay. Yeah, just above. That's fine. 25.19. Nothing wrong with that, Harvey. That's still a good profit. And that's fantastic. It was just around here somewhere. I know we were somewhere here at the 24.98. So I'm not sure. It was probably down here. Probably at this one, this green candle here somewhere. Yeah, there you go. It was probably on that green candle there. So she's been running since then. And you would have got in 25.19. You would have got in on that candle there, most likely. Yeah, there you go. But profit's a profit, eh? There we go. Fantastic news. Knowing when to get in. Let me just quickly show you. Maybe I can show you on the gold. You have difficulty knowing when to get in. Okay. So, for example, you wouldn't want to get in just now because it's run hard, right? So you're waiting for an opportunity to get in. Now, let's say you're waiting for an opportunity to get into gold because you said you have difficulty knowing when to get in. So, okay, let me just show you how to do that. Oh, you took profit. Okay, move your stop loss up, man. You should have moved your stop loss up here to the 25.30. Okay, and it's cool. And you just follow it up. But okay, you got a profit. It's fantastic. You've got to be comfortable with what you're doing. That's fantastic. No problem. For me, it's like just move the stop loss up. That's fine. But that's great. It's probably going to go further. It might come back. Who knows? But what I would do here, okay, firstly, we take it to the day chart. right? And we have a look at what the day chart looks like. Let's say you haven't taken this trade yet, and this is your first shot at taking the trade here. What you're going to look for is, I'm just going to take these indicators out, okay? So we've still got that support in there, so I'm just going to remove all the drawings now. So now you're looking for a new area of support. Now, that's your support there now, right? Then we just take it back to the 4-hour chart quickly. You said you're struggling to look for the entry. Now, if you wanted to enter gold now, don't think that it's too late, because maybe Harvey's move may have been the right move, because what will normally happen, you might get another green candle. What will normally happen, because it's broken through, it's actually broken through this resistance level. Now you'll notice there's a few tails out here, and you'll say, Rob, why are there tails sticking out of here? That's because I put this resist or this support in on the closing prices of the line chart. I didn't put this support in on the tails. What will normally happen, somewhere down the line, this will come back to a quick retest and then go on. So you can wait. If you haven't got into this yet, you can wait for this to come back for its retest and then go on long. That's how you look for your entry on something like this. Other than that, if you're in another trade, you also took profit, Daniel. Fantastic. I should have taken profit yesterday on the US 500. I would have made a fortune. Ah, well, you know, that's life, eh? But let's have a look at, for example, a US 500. And you're looking for a trade on this as well. What you're doing, you see, when you're taking a short trade, you're looking for an entry, look for that closed red candle for the short. And if you're looking for a long trade on the US 500, for example, look for that long green candle closed and then take the long trade. Now you might say, yeah, but it's coming short again. This is doing what's most likely a retest down to here, and then it might go back up again. So it'll normally do that retest. How to look for your entries is, it's not the most difficult thing. You just got to look at Nikkei. We just got into this now, right? So how do you look for the entry? Take it back down to the day chart on. Let's just put it on a line chart. And then you just basically got to draw your resistance in there. And then your support in at the bottom. I'm not even doing this completely accurately, but it's good enough. And then take it to your lower time frame. I don't know, you're trading on the 4-hour, the 1-hour, I don't know. And then basically you're looking for your entries in those areas. Now I went short a little bit earlier. That's because, why did I go short on this? Because we've got a trend. That's why. Okay. So trends. So remember I said to you, you can either look at the bottom of a trend, or you can look at trends, or you can look at ranges. Now, this is in a trend, downtrend, and it's giving me a red candle off the trend resistance. So taking the short on the next red candle with a view to it continuing on down, either to lower levels or to this support at the bottom here. You just got to wait for a candle to confirm your trade, a red candle like that, coming out off your resistance or off your support, and then you know exactly which way you're going to be trading. So, okay. Yep, what goes up comes down, what goes down does go up again. You know, Daniel, I agree with your terminology there. Just be careful of, for example, indexes. Indexes tend to keep on going up. They might come down a little bit, but they tend to keep on going up. If you look at the US 500 over the last 99 years, it's generally just been going up. If it crashes, for example, now, for years, I traded on the US 500 in the thousands and then on the 2000s. And if it was to crash now and it went down to 3,500, for example, it would be the end of the world. So just saying, indexes be careful of. They tend to keep on going in a specific sort of direction. And okay. I'm actually making a profit here on this Nikkei. Oh, okay. That's nice. So guys, should I take my profit or should I hold it? You guys are all taking profit. Oh, yeah. No, okay, cool, man. The Fibonacci tools. Yeah, I can show you how to work with the Fibonacci tools. What shall we use for the Fibonacci tools? Okay. I suppose I can just US 500. Shall we use the US 500? Yeah. I need a bit of a better looking chart here. Okay, so yeah, US 500 might be a good example actually. Yeah, there we go. Have we got Fibonacci on this thing? Do we have Fibonacci? Surely we've got Fibonacci tools. Ah, there's Fibonacci. Look at that. Okay, Fibonacci. There we go. Right. What you do? You see that point there at the top? Rama. See there at the top? Okay. Now we want to go short, right? So let's just have a look here. Take it to the bottom point. You see the low? Take it there. Okay. Right. That's your Fibonacci drawn in. Now, the golden zone is between 50% and 61.8. Anything in that zone is the zone you're looking for. We call it the golden zone because that's where everything happens. Now, very similar to support and resistance, very similar. The price has retraced to the 61.8% level, but it's broken it. So now you're in a situation where it's above the 61.8%. So you might want to wait for the 78% and then for it to come off of there. But in general, if this gives us a red candle below the 61.8% and it confirms that it's bearish, then effectively you should get correction from this level, from this golden zone, going down, back down to the bottom here, which means the fact that it's broken the 61.8 is not the worst thing, okay? Because that means it could go along to the 78.8. But at the 78.8, I believe it'll most likely give you a short and it'll come down. Normally it'll turn around on this 61.8. And that's how you use it. We can go and show you on a long side as well. Okay, let me just have a look here on the drawings. How do I close this thing? This Fibonacci thing. Oh, there. Okay, there we go. Close that off. Right. Let's go and have a look at the Euro US dollar. Let's see if we can do a Fibonacci on that as well. I can show you. Why is this taking so long? There's definitely something wrong with my internet here, I think. I don't know. It's like weird. I hope it's not affecting the video in any old way, but let's just see. It might be their side as well. This was 50 bucks in profit just now. Now it's like $6 in profit. So obviously something's gone on there. So here's another classic case where you can use the Fibonacci. For example, you can take it and you can draw it in from the high to the low, and it should now go long up until the 61.8 over here, and then you'll get the short coming back down again. That's effectively all that it's about. You can do it on the long side as well. For example, this one's already played out. So if you'd had Fibonacci in over here, oh dear, that didn't work. Let's just hang on. Fibonacci. See there, That's your Fibonacci from that low there to that high. So you're now on the 50%, and you're not quite in the golden zone, but it's bouncing off the 50% and going up. If it comes down into this golden zone, it'll be a nice long trade going up as well. I don't play a lot into the Fibonacci because you can play it either way. I prefer to stay with the support and resistance zones, but you'll find sometimes with a fib that it actually conforms to your support and resistance zones as well. And it can be quite useful, quite interesting to trade with. So that's how you use the fib tools. If you want to ask any more questions, you can. It's no problem. Move the stop. Yeah, absolutely. I'm going to show you what I did. Sleepy Joe put on man cap. I'm going to show you what I did with the US 500 because I can't do much with this right now because it's obviously a fresh trade. So let's go back to the US 500 and I'll show you what I did there yesterday. And that is effectively, this was the trade we were in. We were short and it dropped to 54. Now, my stop loss was at 55.20. And when it dropped to 54, I actually decided that I don't want to be 120 points away on my stop loss. You know, I don't want to be up there on my stop loss, and this is down here. I took one look at that, and well, you know, this trade's moving in the right direction. So surely, by any normal means, that's going short because that's where it was going. So I took my stop loss, moved it down to the well, it wasn't actually cost. I moved it down to what would have been cost, but then I sort of plus 7'd it because my entry was at 54.68, put my stop loss at 54.60, because 60 points for me was more than enough away on an S&P on a US 500. So I thought that's a good place to put the stop loss. And unfortunately, it went back, took it out. Still in a profit, but it took it out, carried on north. But now, had it carried on going short, I would have actually looked at adding to the trade at around the 53.85 level on another candle, not on the same candle, because if it does it in one candle, you don't want to mess around with that. But on another candle, if you get another candle going and you get another red candle going down, and the trade's sort of confirmed that it's going in that direction, then you can start looking at the last low. If it breaks the last low, you can say, well, you know what, it's breaking that low. Let's look at adding to this trade. And then you can move the stop loss down even further to more reasonable levels where you would have put the stop loss in the first place. Then watch it go all the way down. There's no space in between here. You watch it go all the way down to the all-time lows. And while it's going down, just keep your stop loss 50, 60 points away, or where you feel comfortable on that particular product that a stop loss should be. Because, you know, you want to keep it that $200 away all of the time because that's your stop. And that was the initial stop in the first place. 54.68 to 55.20 was around the 60 points. It was around the 200. So for me, the 54 back to the 54.60 was another 200. That was fair for me. And then if it goes a little bit further, another 50, 60 points, move the stop loss down again. You just don't want to find yourself sitting with a stop loss that was initially 60 points away and now it's 120 points away. Why do you want to do that? Move it into the same range. That way you only, even if you're in profit, you're only taking that $200 out of the trade at the end of the day. And that's the best way to move your stop loss. Okay, many thanks. Yeah, it's a pleasure. I hope that helps you with the fib. If you have any questions on the fib, feel free to ask in the future. I don't trade with it every day, but it is a product that I know. Yes, you got to journal your trades. You do have to journal your trades. That's quite important, but yeah, I do get lackadaisy sometimes, and I do forget. For example, on this funded trader account, I haven't really journaled the trades, but they are here if I want to see them. So there's no big deal. A lot of people play a lot into journaling, like it's so important. And it is important if you want to go back and check what you've done and that sort of thing. But most trading accounts have a statement and you can go back and you can see what you did. If you want to journal properly, you actually need to take a screenshot of the chart and see what you did and all the rest of it, and go back and have a look at why you took that trade and that sort of thing. But I don't really need to do that anymore. I don't really bother with it too much. I don't play too much into it. I do slip up, I must be honest with you. I'm quite lazy with that because I get a statement. I know what I traded and know what I didn't trade. And I really don't need to go back on my trades and see what I did right and see what I did wrong. And it's not that important to me. It either wins or it loses. It's a 50-50 game. But yeah, journaling, a lot of guys play a lot into journaling, and yeah, journal your trades. Nothing wrong with that. Yes, it is, Daniel. It's the same. It's the S&P 500. It's the SPX 500. I don't know why there's so many different names for this product, but you know, when the guys make a market, maybe there's some copyright rules or something to that effect. You know, the markets are made all over the world, and you know, here in South Africa, we do know it as the S&P 500. I think it's well known as that overseas as well, SPX 500. So yeah, the US 500 is basically that. Actually, I had no trades today because I didn't take trades, and then I took this Nikkei trade just now while we were live. We took this trade just to have a trade on the account because, like I said, I forget to open this because it's not as important to me as my other account. So I'd rather concentrate on that. But I must learn to open this and trade with. But I have to also be careful. Like I said, I can't open 10 trades on this thing and then it takes $1,000 loss and closes the account. So I'm trying to keep the account open as well so that we can play around with it like this when we have our live shows. So this is the Nikkei short, in case you're wondering what that is. It's the Nikkei short. It's very small, eh? You know, I don't know if you can even see it. JAP 225, as it's known here. Also, different name. They've always got different names. It's how it goes. And then you get the ES minis as well, and that sort of thing on the US 500, and all these different little products that you get. Yeah, you know, Harvey, it's difficult to change time frames. I know, to adjust, because you've got to adjust the amounts as well. But you know what's really nice about the higher time frame is if you go onto the lower time frame, you've got to take a much bigger trade in a much smaller period, and you're live and you're watching it and whatnot. Whereas here you can take a trade and just leave it and come back and see what it's doing later on, and you can take wider trades. It makes it it's actually a lot easier to trade on this slower time frames. And once you get used to it, it's not that bad. You just got to work out your amounts, that's all, and where you stand. So I don't know if this trade's ever going to work out for us in the next couple of days, but I'm going to leave it and see. And if it starts doing well, I'll move the stop loss down and we'll see how it goes. It's just an interesting trade that we took while we were live here, just for the fun, just to see how we're going. So we've had a few people on the session today, on the US session. Do you guys want me to do the Euro session next week as well? I suppose we should on Tuesday, and then we'll do the US session on Thursday again. Do you check after every bar closes? Actually not. I was actually lucky yesterday on the US 500. I just happened to come in at that time and open the bar up. No, I don't check on every bar. I open from time to time. The thing is, from my side as well, you know, I'm a trader at heart. I'm there to make money. So, you know, obviously I've got my trading things on my phone, and wherever I am, I've got the habit of just opening up and having a look. You all do it. I know you all do it as well. We all do it, right? If we're not sitting at our computer, we're obviously going to click on it and just check where we are every hour or two or whatever the case. So by habit, I tend to do that just to see what's happening. And if I see a general trend one way or the other, then I might make an adjustment on the phone, or I'll come to the computer and make the adjustment that's necessary. So I do tend to check because it's habit. It's something that I do. I've always done that. Probably because I'm a trader at heart, and that's what we do. And you all do it. We all do it. So yes, okay, Rama, cool. So we're going to do both sessions next week as well. That'll be great. We'll definitely do that. And wow, I'm losing money again. Can you believe it? Whole $3. Yeah, that's the only trouble with trading on the 4 hours, Harvey. You'll find this is you'll take a trade and it just doesn't happen. So there's no instant win or instant loss. It takes time, and you've got to leave it in there and wait for it to play out. And you got to remember it takes much longer to play out than it usually does on those 5-minute or 1-minute time frames and that sort of thing. If you want to have a bit of fun and you're bored on the day and you want to trade something quickly, go and play with those 4 or 5 minutes. But just remember, it's bad for the heart. It's very stressful, and it can make you gray like me and old. Yeah, but Rama, you can use your exponential moving averages. You can use your simple moving averages. You can use your moving average crossovers. You just have to remember one thing, and that is they're a lagging indicator. So when that indicator shows you to trade, just like the MACD or stochastic or anything like that, the trade's already happened, and that's why we trade this way, so that we can get a head start into the trade. You know, when you take a trade on the moving average, you've lost a rather large portion of the trade by the time you take the trade. What I use the moving average for, the main thing I'll use the moving average for, is for my investments. I don't know if you've seen my investment video. I normally on a weekly, I'll if somebody asks me to look at a stock, I'll put the 2 moving averages on. I will put on the 200 and the 50-day moving average. And I do that because if the 50 has crossed above the 200-day moving average, that's called the golden cross, then I will invest in that company because I believe that that company is positive. And if the 50-day has crossed below the 200-day moving average, that's called the death cross, and I will not invest in a company where the 50-day is below the 200-day. It also gives me a good signal as to whether a company I'm invested in is doing well or if it's doing bad. And effectively, if I've got a death cross on a company that I'm invested in, I might prefer, if it feels bad, to sell up the entire company and move the money, but then I'll take the entire amount and move it into a better company, a more blue chip company. So keep that in mind. The 50-day and the 200-day you can use. And on normal day trading, a lot of guys are using the 9-day with a 20-day or the 20-day with a 50-day and that sort of thing, the crossovers. It's a bit like the MACD. It can work for you. It can work. Just bear in mind that it is a lagging indicator and you will be taking a lot of money off the table when you're trading. But yeah, it's not the end of the world. Yeah, sure, we can do smaller time frames. We can even trade on the 5-minute. I don't mind. It's no problem. Makes it more fun, but you know, I'm also at the same time trying to get you guys into a mindset that works. So let's be careful. But yeah, we can try it out next time. Yes, Harvey, by the way, before I go, that's what I call a sniper entry, what you've mentioned there. Will it help looking at a lower time frame like the 1 hour or the 30 minutes? Totally. So what we do, we look at the higher time frame, so the day, and we say, look, on the day, it's bearish or it's bullish, and we draw our resistance in and we draw our support in and we've got our levels. Then we go back to the 4 hour and we're trading on the 4 hour and we're thinking, should I enter or shouldn't I? Then you can drop down to the hour, drop down to the 30 minutes, even drop down to the 15 minutes, just have a look at what's happening and take your sniper entry from when that one sort of turns bearish, and you can get in ahead of the game. Absolutely. I've done that a million times. It works for me. Just be careful of going all the way down to the 5 minutes, because remember, that's a very short time frame, and you can end up simply trading in just far too early. So yeah, you probably find the 30 minutes and the 1 hours will work best for you. Righto, so I'm going to start heading on out, because as you know, when it's Cape Town, it's late afternoon, and when it's America, you guys are in the morning. So I don't know who's from the US here and who's from South Africa or who's from Europe, but we live in different time zones. So for me, it's later in the afternoon. It's after 4, and I'm going to leave it at that and move on out. And thank you guys for being with me. Thank you guys for watching, and I hope you'll be back next week for the live videos. Then the Euro session on Tuesday, the US session on Thursday. Don't forget to also watch the Friday video, and on Saturday I'll bring out the general what happened over the week and what's happening next week video for Saturday, and then that's it. So guys, thanks for being with me, and till next week, lovely having you guys. Kevin just logged in. Just watch the rerun. Hopefully I'm not too boring and you'll enjoy it. Guys, thanks a lot. I'm going to be off.